Good day, I'm John Kingston, and what a difference a day makes. At this time yesterday, I was talking about the loss of Saudi production as a result of the attacks on their facilities and fields over the weekend and how bad it was going to be. And then Saudi Arabia shocked the world yesterday by holding a press conference and saying that they've got about 50% of their production back. Their capacity will be full by the end of December, up to 11 million barrels a day by the end of this month. And the market had already fallen on the news that they were going to come out and say this. So where do we stand at this point? The price of crude is still about $4 above where it was prior to the attack. The commodity price of ultra-low sulfur diesel, that actually is now below where it was before the attacks. The attacks were over the weekend, and now it's less than that. So what's that going to mean at the pump? Let's take a look at our chart here. This is the ULSDR.USA graph that you see on Sonar. This is the wholesale price of diesel at what's known in the industry as the rack. You can see where it shot up on Monday. No surprise, given everything that was going on in the market. It started to come down yesterday. I'm assuming it's going to come down even more. Retail prices actually shot up as well, which is sort of interesting because the retailers probably weren't yet seeing the impact of the wholesale prices, but they moved their prices up in anticipation that they would see those prices rise, and also just the general market knowledge that things were going to be tighter. Well, now what's happened, of course, is that the commodity price of ultra-low sulfur diesel on the CME is down below where it was at the start of the week. Retail prices were moved up considerably on Monday and probably on Sunday as well. You're going to see those come down a little slower than the wholesale prices. That just is the nature of the retail price. I know it's maddening to anybody driving a truck, anybody filling up their car. I think there's a term in the industry called up like a rocket, down like a feather. I don't know that it's going to come down like a feather, but there's definitely going to be a little bit of period here where the retail prices will still get a bit of an elevated boost from what happened recently. As far as the future, there's a lot of cynicism out there about the Saudi statements. The Saudis can meet all the contractual obligations, but a lot of it can be from stocks. A lot of people are really questioning whether the repairs at the big facility that was hit can get taken care of that quickly. Some of the equipment that was damaged is highly complex. So as I said, there's a lot of cynicism out there. If in fact this becomes a market where the Saudis are supplying out of inventories, if that goes on for a significant amount of time, there will be markers in the market, spreads, intermarket relationships that will tell you that inventories are getting very, very tight. So we're going to have to let that play out for a while. Certainly the immediate crisis is over, but it doesn't take away from the long-term fact that the Saudi industry, one of the most important in the world, concentrated in a relatively small amount of space, showed itself to be extremely vulnerable over the weekend. There's a lot of geopolitics that are going to occur out of that. We're not going to talk about that now, but from the oil perspective, this is probably going to add a few dollars, maybe permanently, to what I would refer to as a risk premium. For FreightWaves Now, I'm John Kingston.